Hey everybody, TG Watkins here. I'm recording this during market hours, kind of in the morning-ish on January 5th. Welcome to 2023. Hope everybody had a good holidays and New Year's and everything else like that, and getting back into the swing of things with the market. And that means not a whole lot. The market is still very, very slow and very choppy right now. In fact, if we look at this, here's the S&P. We're going on our third week of the market just being sideways. So this basically, you could kind of pick a date, but the 16th is kind of what I was looking at as the market starting to get into this range. And here we are on the 5th. Now, of course, we got the holiday season in through there, so kind of some sideways action makes sense. But going on this long, it's like, ooh, what's going on out here? Now, they do say don't short a quiet market, and we do know we have a high short interest out there. We have a lot of, the put call ratio is very high, so there is always kindling for a short squeeze. But that seems to be about the only thing that is going to save the market or the bulls in through here, is if some sort of piece of news comes out there and squeezes this market to the upside. Beyond that, I don't know what's going to be the trigger for bringing money in, especially with a kind of a poor start like this. Even in the first day of the trading, we had price significantly up like this, and it pretty much hit the upper third ATR on the hourly chart, but we would still categorize that as an inverse trampoline move because price is over the 50 and the Moxie indicator is below 0. We could still be looking at that even through here. So, Moxie indicator is still below 0. Yes, I know we could, here, let me draw that better. We could look at this as seeing some positive divergence starting to build, true. But until this thing actually starts to engage with and hold the hourly 50, there's really nothing to say in through here. One other thing I've been kind of talking about is if we look at the past and we see in through here, we talk about like the distance between the hourly 50 and the hourly 200, and this thing didn't in the past didn't go bullish until price held the 50 and then the 50 crossed over the 200. We still have a pretty good distance between the 50 and the 200, which if this is going to go up means it's still got a fair amount of work to do in order to narrow the distance between the 50 and the 200 and bring that thing up so it can cross over. As I said, meanwhile, we're noticing the Moxie indicator is still below 0. So if the bearish case is that maybe this thing just doesn't do much and eventually it just kind of starts to roll off. I mean, are buyers coming in or not? We can see that price has been getting rejected by the daily 21 for now. That makes sense. And if this keeps up, like yes, there is another potential trampoline move here on the daily chart, which is when price is below the 50, but the Moxie indicator is above 0. Typically, that's a bullish scenario, but it's a potential until it confirms, and right now it's not confirming yet. And if this continues to go like this, we might even see that maybe the daily 50 starts to become a resistance if that starts to curve under like that and it continues to go down. So I would just be careful with what's going on out there. If nobody's wanting to come in and buy this thing up, then the market's just going to keep kind of going down. It seems like people are not wanting to touch this with a 10-foot pole. So we're looking at that on the SPY. The Nasdaq is basically same thing, just looking real weak. And the only thing we can kind of say in through here is, well, is this level going to hold? And third time may not necessarily be the charm. And again, with the continuation of the inverse trampoline move here on the hourly chart. So if this is going to go up, we need to see price get over the hourly 50 and engage with an uptrending hourly 50, and there's just nothing like that happening yet. We can take a look at the IWM, more or less the same story, just kind of in here flagging, not much going on. And the IWM actually looks a little bit more, gosh, I would kind of say that looks more like a bear flag coming in through here. Yes, I know, looks like today we had a Moxie price trigger firing, yes, kind of this and this, but unless it can really start doing something, and I'm looking at the other indices, and I'm just not getting much strength or clarity or anything else like that. So I'm going to be holding off from making any real big moves in through here. I just don't see much happening right now. And I would be concerned about the weakness that we're kind of seeing in through here. For the Dow, it looks like price is just kind of starting to slice through the daily 50. Again, with the idea of a potential trampoline move, okay, but we still have the 8 below the 21. If anything, I'd like to see this thing start to, if it's going to be going bullish, we should see some sort of sign of strength where the 8 is starting to cross over the 21, and so far it's not happening. It's just super heavy. And if we look at the hourly chart, this continues with the inverse trampoline move. This really kind of looks like a bear flag. I mean, I know we kind of have some divergence here, but otherwise, price is not holding or engaging with the hourly 50, and we're just going sideways, and the hourly 200 might end up being resistance. And so just kind of looks to me like this thing's getting weak and not doing much. There is one other thing that's I found interesting looking at the semis, and I've been pointing this thing out for a while, but mostly because if you look at the semis, it's been following a really nice channel for quite some time. Let me get this drawn right here so you can see there's been a really nice channel right in through here, and look at this. That has now hit the upper channel. If I could draw that a little bit better, I just want to show you. But there's been a channel. It broke out of the channel and then came back down, is now sitting on the top side of the channel. If this were to be bullish, and as far as channels and trend lines go, a lot of times what you see is you see a breakout from that trend line, and then you'll see it retest the top side of that trend line, or the bottom side if it's breaking out to the bottom. And it's kind of like the whole first move, second move thing I talk about with moving averages. It's the same concept. Get outside of the trend line and then test the trend line for support. We're right there. Now, of course, it doesn't have to happen. It's just a trend line. The market's going to do what it wants to do. If things happen to go bullish, and if this happens to work, I wanted you guys to be aware of that so you can see how that looks. Otherwise, if it's not going to work, it was just a big bounce in a downtrend, and it would come here, and then it could maybe continue to move down. So just something to be aware of. Again, nothing that I can actually say concretely that we can work with in through here. And then if we look at the VIX has kind of not been very helpful either. It's just kind of staying here, trading in a range. Now, the old adage, VIX low, look out below. So we do need to be careful that the VIX is very low, and it seems like it would be primed to start moving up, which means the market's moving down. We do see a double bottom right there, so that's something to be of interest. There's a double bottom, and can price get past the daily 50? If so, then this could go bullish, which means bearish for the market. And we see here, there's that double bottom, and we have positive divergence. Not only is it positive divergence, so we do have price below the 50 and the Moxie indicator above 0. So there's your trampoline move. And then the confirmation of that is now that price is starting to get over the hourly 50 with the Moxie indicator above 0. So if this continues to hold, if price continues to hold the 50 and start to move up, there's your confirmation of an up move, and then that means bearish for the market. In through here, also notice that the 50 has been starting to cross over the 200. That is another form of a trend change. When the fast moving average starts to get over the slow moving average, that's a trend change. This is why with the SPY on the hourly, I was saying, hey, we need to see the 50 get over the 200, and on the SPY, that distance is still pretty big. And so even if it were trying to go bullish, it's got a lot of work to do because that 50 is still pretty far away from the 200. So it kind of seems weaker to me as far as the SPY goes, because that 50 is still below the 200 and could just continue to roll on down to the downside. And then if we look at the UVXY, this is another thing that like nothing's going on with it, but then again, the market's not doing anything. The UVXY is a product that will continue to decline even if the market's not doing anything. It is a perpetually declining tool, basically. And not much to say here. Maybe we can see a little bit of positive divergence coming in here from the daily chart. We have been watching this hourly trampoline move, but again, it's the UVXY. This is a very tricky thing. Apparently a lot of this fear, or a lot of this movement, the decline of the bear market, is baked in, and so there's just kind of no need to hedge using the UVXY right now. So I've just been watching it. There has been nothing to do with this, no setup, just chop, and it's not giving any clues. And I don't know if it's going to, because if the market does roll over and go down, maybe it's already baked in. Maybe traders are not using it to hedge with. The dollar, UUP. So I'm going to look at this and look at gold at the same time. The dollar has been coming into, let me come over here. Now, mind you, I'm trying to wrap a very large macro indicator, or macro ticker, the dollar, basically, around the Moxie rules and technical analysis. And the only thing I can kind of really point out in through here is, number one, it's sitting on the weekly 50, and number two, it got a little oversold because there became a gap between price and the weekly 8 EMA. So a little oversold, finding some support. And the other thing that I could see is that we had price. Let's see. Oh, there we go. We had price down, the Moxie indicator up, and now we've been putting a double bottom with the Moxie indicator continuing to be up. And now look at this. We just bounced off of the hourly 50 and starting to get over the hourly 200. We haven't seen this in a long time. You can also see a huge gap between price and the daily 50 starting to make its way back up. So I've been talking to the Moxie traders and Moxie group about this and saying, looks to me like the speed of its descent is starting to slow. Looks like it's starting to come into some support. It looks like it's going to bounce. So I've been watching this and saying, okay, dollar looks like it's going to be bouncing at some point. When is that actually going to happen? And it took forever until we finally started seeing this action this week right here on the hourly chart. Now the dollar moving up should put pressure on equities. That's kind of the age-old thing. Should put pressure on equities, and it should also move inversely to, or at least precious metals should move inversely to this. So then we look at GLD. And what happened to GLD? Well, interestingly, yesterday, so mind you, I'm recording this Thursday, so yesterday, Tuesday and Wednesday, we had gold really move up. And it seemed odd. It seemed odd to me, like, why is gold moving up when the dollar's moving up? Like, is there something else going on? Maybe there's a disconnect. Like, I don't know what's happening here. What's the reason? The other thing I'm looking at is, you know what? Price kept trying to move up higher, and notice that the Moxie indicator was trending down. Like, that doesn't look good either. Now, of course, things can change. The Moxie indicator is just reading momentum, and so if new news comes in or new buying or momentum changes, it's going to reflect it. And so, you can see, well, hey, new momentum came in. But this looks strange. This looks like it's really, really kind of at the end of this run. Of course, it can keep going higher, but it just seems risky for me to try and, want to build and pick up a position in through here. I also look at the 50-200 to 50 maneuver, and I say, this move has not pulled back ever since it crossed over the daily 50, and a lot of times, at some point, price will want to come back down to that 50. So I look at that as a bit of a risk, and the question is just, when is this thing going to roll over and break down and start heading towards the daily 50? I'm not sure. I can't see it yet. I thought it was going to happen in through here, but it hasn't. It decided to continue to move up. And again, this seems odd considering what the dollar is doing. So today's big down day, that makes a little bit more sense, mostly just because it was very extended yesterday. It was up at the third ATR and outside of the third ATR on the hourly chart, all that kind of stuff. So yes, the trend is up, and sure, it can keep going, but through my eyes, I'm like, I'm getting a little bit. It seems a little risky about trying to play it to the long side. Keep going with it. See how long you can get it for. Just realize that maybe it's starting to look a little bit funky. The GDX, basically the same thing. It looked like it was starting to run into the 200, and it looked like there, the likelihood of it starting to come back down to the daily 50 was about upon us, and that it was going to start moving down, but instead it went up. We looked at this. This was an inverse trampoline move on the hourly chart. But then I guess we could say we had some positive divergence in through here and it popped. Of course, GDX is going to follow gold, so okay. I just don't have too much of an answer with this. It'll keep going up as long as it continues to follow these moving averages, but I also see that there could be some downside risk simply because price is pretty far away from these moving averages, and they tend to like to come back. Also, the dollar. If the dollar is moving up, should be putting pressure on this. Now then we come over to silver, and maybe this is a little bit of a clue as well. And again, we're just trying to kind of put some of these pieces of the puzzle together. I look at this and say, a little bit of a head scratcher. Silver is doing what I would have expected it to. You can see here, price was moving up and the Moxie indicator is moving down. That was very similar to gold and GDX. And silver decided to move down. You can see it's actually now back below its daily 21 and starting to head towards its gap, basically, between price and the daily 50. So this negative divergence that I was seeing on the hourly chart did work. But gold and GDX decided to go the other direction. I don't know what to make of that. I don't know what's going on with that. This silver is responding more of the way that I would have expected given the dollar and the Moxie indicator. So just going to leave you guys with that and say, is silver telling us something that gold might eventually wake up to? And if we look at TLT, which is the inverse of TNX, so bonds and interest rates, Let me get this thing loaded in through here. The thing that I've been watching, and this actually happened a lot faster and a lot quicker than I was expecting, but again, here's the 50, 200, 50 maneuver. Typically, you get a little bit of a bounce right there at the 21. Didn't do that at all. Went straight down. But as far as the bigger pattern, 50, 200, 50, worked out like a charm. So now here we are bouncing at the 50, uptrending 50, uptrending 50 with the Moxie indicator above zero. Should be bullish, right? Okay. What about on the hourly chart? Well, what do we have here? It's an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. So if this is going to continue to go bullish, I would generally be expecting some sort of pullback here, retest the low area, get some positive divergence on the Moxie indicator, and then see if it can continue to move up from there. If it does, hey, bullish. That goes up, TNX goes down. If not, then this is just a bounce at a downtrend as price bounced off the 50 and it will continue to go lower. So that's kind of where we're at. If you think this is bearish, then this is a great place to short and see if it goes down like that. If you're bullish, well, then I'd still really like to look for a pullback and see if that pullback holds support and then goes up from there. So that's the path, and if you're bullish or bearish, that's how you would look at that and how you would play it. Now then we come over to, say, the big names, because I tell you there are names out there kind of moving every which way. I look through my tickers and my list, and I just see so many names that have already been beaten up and shot, and they are just flatlining. They're kind of just trading sideways. They've been doing that for weeks, if not months, and it's really hard to, say that there's anything that you really want to do with them. So it seems as though the bear market is working its way up the food chain, which is how bear markets go. They start with the small stocks, the high risk, the IWM type stocks, and then they start working their way up the food chain, because everything is going to eventually get hit in a full-blown bear market. And so what we're starting to see, like Tesla's been hit, Meta, Netflix, Google, Microsoft just got hit yesterday because they had some news come out, downgrade, all that kind of stuff. And so now we're seeing Apple. Apple was pretty much the strongest last one of that group to start getting hit. We're hearing about layoffs. We're hearing about downsizing. I mean, we're hearing all the stuff about a recession and a bear market, and it seems to be coming true. So even though it looks like Apple's getting a little bit stretched through here, maybe we could say it's an undercut. But if we look at Tesla and if we look at Amazon, there are no bounces. Little pops here and there, but the overall trend is to the downside, and the weekly 200 and the monthly 50 could be targets for Apple. You can see that. So I would be expecting some sort of bounce. It's been a while since price has touched the 21 EMA. Typically you see price bounce up into the 21 EMAs. We haven't done that in quite some time. So just on that alone, I would say, okay, hey, where's the bounce? Where's the bounce? Like if you wanted to short Apple, I would say wait for a bounce to the 21 EMA. Again, just like these. So I'm stuck between a rock and a hard place. Apple, I look at this and say, well, I wouldn't really want to short it right here. I'd like to wait for a bounce. Well, do I want to go long? No, I don't really want to go long either, because boy, this thing looks pretty rough, and I'd only be looking for a bounce at this point. I'm not sure I really want to trade a bounce to the long side. So there's kind of nothing for me to do with Apple in through here. Let me show you Amazon, because then you can see what those general small bounces in a downtrend look like. Let me see if I can get the hourly to load. There we go. So you can see here, here's the 21, a little bit bigger bounce here, 21, 21, 21. Now I was looking for a double bottom right in through here. Maybe things were going to go up. Nope, didn't happen at all. So you can see here, no double bottom. Support was not holding despite the Moxie indicator being up like this. It just could not hold the moving averages. Is this time different? Maybe. We'll have to wait and see if it confirms. But this is what I'm talking about with Apple. Very oversold, and I'd be looking for a bounce, but be careful that bounce could just get sold into. So yeah, not much going on there either. Gosh, LMT, Lockheed Martin, not necessarily falling over, but this is something that, again, with my patterns and the things that I look at, let me get the Moxie indicator loaded on this one. You could see that initially the big distance between price and the daily 50, like, okay, huge move, great, huge move. But at some point, it's going to want to touch or test the daily 50, which is what I've been talking about for some of these other indicators or tickers, is that at some point, daily 50, like gold and GDX. And what we can see is on the hourly chart, see how price has been over the hourly 50, but notice that the Moxie indicator is below 0. That was generally telling us, like, hey, don't be looking at the long side. It's at least going to go sideways to down to try and fill this gap in through here. And, just be careful on the long side. And that's generally what I'd be looking for gold and silver and GDX, but silver's doing it, but gold and silver is not. Or sorry, silver is doing it, but gold and GDX are not doing it. And so this is a very tricky market because the things that should be working are not working as consistently as I'd like, and so it's hard to say, well, which one's going to do it, which one's not. And you can see this one basically went sideways instead of down to reach the daily 50. That brings me to basically my last one, one I've been just chatting about because it's surprising at how much this thing is going against what I would expect it to be doing. Burlington Coat Factory, retail. We look at this. Why is retail doing so well right now? And again, with that giant gap between price and the daily 50, I would have expected this thing to come back down to the daily 50 at some point, but it's not. Why is it? Why is it not? I don't know. And if you look here, it was an inverse trampoline move, but now we have the Moxie price trigger firing, and we're making new highs. Like, why? What's going on with this? I don't know. And it's strange to see that retail is kind of perking up the way it is like this, given the rest of the market and its conditions and how that's happening. So, all right, guys. Well, as I'm kind of laying low for the beginning of the year because the market's been really strange out there. No need for you guys to really try too hard on anything. And from there, I hope you guys enjoyed the start of the year, and we'll catch you next week. Thanks.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.